Welcome, ladies and gentlemen, to Commodity TV and a new edition of our virtual online interview series. Today, we want to talk to Sam Pazuki from OceanaGold. Hey, good morning to Toronto. How are you doing?
Good morning, Johan. How are you?
Perfect. Thanks. All fine. Yeah, OceanaGold, of which I'm a shareholder. I have to disclose that here up front, of course. Yeah, you had quite still a good year, 2021, I would say. And let's get started with that already, as you reported some numbers. So 2021, are you satisfied?
Yeah, last year was definitely an interesting year, but overall, I would characterize it as very successful for the company. It's great to be a diversified gold producer for operations. It allows you to ensure that if you're having challenges in other operations, you've got other operations to sort of backfill that. And that's kind of what we saw last year for the company, with Hale delivering record annual gold production. So again, this is the most amount of gold that Hale has produced ever in its 5 or 6 years of operations. Obviously, we got the renewal. We worked with the government of the Philippines, and one of the key highlights that we had last year in 2021 was the renewal of our Financial or Technical Assistance Agreement, FTAA, which paved the way for the restart of the Didipio operation. And so Didipio had a great sort of ramp up as we drew to the end of the year. Even despite the challenges that still exist globally around COVID-19, we managed to be able to do all the prep work or pre-work we needed to do to start operating again, both the underground mine, but also the process plant. And so Didipio had a modest guidance in 2021. We only had 2 months of new production at Didipio, and it exceeded our expectations. And more importantly, we had a large amount of copper gold concentrate inventory on hand. Basically, this was the concentrate that we had produced prior to being shut down, which upon the renewal of the FTAA and the receipt of subsequent permits, we were able to ship that out to the coast and get the sale recorded for that. So very strong year out of the U.S. and the Philippines. New Zealand had some challenges, but again, being a diversified producer, it allows one or two operations or multiple operations to backfill some of the gaps in the other operations.
Absolutely. Yeah, we saw also that you had an impairment charge of $102 million for Hale. Altogether, it was $181 million, but you had a non-cash post-tax impairment reversal of $79 million for the Didipio. So yeah, that really helped a lot that the Philippines are back on track, right?
Yeah, that's right. I mean, impairment is a non-cash accounting measure. Every asset is basically tested on a quarterly or semi-annually basis to ensure that its book value is it's still intact. We announced more recently the completion of the Hale technical review, where we were looking at okay, what is the most effective way that we can operate this asset, given what we know over the last 5 or 6 years. And what we know is that the costs have been considerably higher than what we had originally estimated in the previous 43-101. Our capital costs have also increased. Even despite the increase in cost and capital, we're still able to maintain the resource base and include that as part of the new mine plan. But with the higher costs, the carrying value was really reduced, and that's why we had to take a non-cash impairment. But as you pointed out, Didipio, we had written off $79 or $80 million a year before, and now that it's back in operation, we were able to write that back up. Again, a non-cash accounting measure, but and having multiple assets certainly helps to soften the blow of the impairment at Hale.
Great. So let's come a bit more onto the future side, because you are planning, to bring up the gold production or increase the gold production by approximately 70% compared to last year's production, which is a compound annual growth rate of approximately 15% until 2024. So we talk now for this year about 445,000 to 495,000 ounces, then 490 to 530,000 ounces for 2023, and 580 to 620,000 ounces in 2024, also with decreasing costs, which I really appreciate. So can you comment a bit how you want to achieve this? On the one hand, to bring that many more ounces into your production on the one hand, and on the other hand, despite the inflation we see in the world, how do you manage to bring the costs finally by, yeah, I would say approximately 15 to 20% AIC per ounce down?
Yeah, I mean, a big reason for that is just having the DPO back into the production mix. So the DPO, again, it's ramping up better than expected. So the ramp up schedule is we're exceeding our own expectations, and the DPO will be delivering almost a full year's worth of production this year. So adding 110,000 ounces of gold to the production base certainly helps lift it from where we were in 2021, where we produced 300 and almost 63,000 ounces of gold. It also helps to offset the decrease that we expect at Hale, which we'd already flagged to the market, the continued delay in getting the SCIS, which is impacting the output for this year. So the DPO helps with plugging that gap, but it also we're also seeing increased production out of Waihi expected for 2022. So it's, again, having a diversified portfolio with multiple assets allows you the flexibility to pull levers where you need to, if possible. But the main proponent for the increase in production this year is related to the DPO. And just as importantly, with the DPO back, we also have copper production back into the portfolio. And given where metal prices are for gold and for copper, it's a great time to be a copper producer. And so the DPO, it will produce, a decent amount of copper this year, in the order of 11 to 13,000 tons this year. And we report our costs on a byproduct basis. So the revenue from the copper, we use that to reduce our cost base and come up with our unit cost, cash cost, all-in sustaining costs. But you're right. I mean, we are seeing inflationary pressures in the industry. I mean, globally, we're seeing inflationary pressures. We're not immune to those issues. We've seen them across the board. Obviously, fuel prices are quite high. The WTI price hasn't been this high in, I think, 4 or 5 years. So that's a big part of our cost base, particularly at Hale and at Macraes, where we run open pits. The diesel prices have gone up. Other material prices have gone up as well too, but we've recognized the sort of the headwinds around that and some of the supply chain issues that again we hear on the news. So we've been trying to be ahead of some of those issues, and we've got a good strategy in place to ensure that we've got the supplies that we needed, but we are also locking in those supplies at a good price. The costs. So that's impacting some of the higher costs. But then as we progress through the next few years, we will see continued investment on growth initiatives. We still have an elevated amount of capital to spend on sustaining capital related to capitalized mining, basically capitalized strip mining. And then we'll continue to invest in exploration. But as the unit costs go down because the production base moves up. And that's a big factor for why the all-in sustaining costs and cash costs will reduce over the next 3 years. But from a production standpoint, over the next 3 years, we're basically looking at a 15% compounded annual growth rate from 2021 levels. So pretty substantial. I mean, with the amount of production we have, it's a pretty substantial amount compared to our peer group.
Okay, super. So what you gonna do with all that money? Because we expect gold prices well over $2,000 per ounce, and also I expect copper prices well above. I would say the next 18 months is $11,000-12,000 per ton easily. So the question for me is, as you have heavy organic growth on the one hand, on the other hand, you will make a lot of money. Do you say, okay, we work more on the organic growth, we maybe want to enlarge our mine lives throughout all operations, or could you imagine also to do maybe some M&A?
Yeah, I mean, it's a good problem to have.
Yeah.
And that's one of the key highlights from our fourth quarter of last year. We delivered almost $24 million in positive free cash flow, and that was the first quarter of positive free cash flow for the company in almost 2 years, probably well over 2 years. And this year, with even despite the continued investment in capital and some of the higher costs, we expect to deliver a full year of positive free cash flow. Again, we haven't been in this territory since 2018, so it's good to get back into the black. And with the higher production that you pointed out, I'm more focused on how much free cash flow that we generate as a company. And you can see with the numbers that we published, assuming spot pricing, we will see a steady increase in the amount of free cash flow that we'll generate over the next 3+ years. So that's a very good position to be in. Allows us a lot of financial flexibility, allows us to continue to invest in high margin growth like WKP, which is a fantastic project and one that we continue to look to further advance. It allows us to reduce the amount of debt that we have on the balance sheet. Our revolving credit facility isn't due until the end of 2024, but with the amount of free cash flow that we'll be generating, it gives us the flexibility to make some discretionary debt repayments over the next couple of years or so. And then your favorite topic as well is returning capital to shareholders. We used to be a dividend payer. I know the board is interested in getting back into that discipline to return capital back to shareholders. No decision has been made, but I'm sure the board is having those discussions. So no promises, but again, it gives us the financial flexibility to be able to return capital back to shareholders. On your question on M&A, the industry definitely needs more consolidation. You've probably heard me say this to you before in previous interviews. I'm a big proponent of mergers of equals and acquisitions that make sense, where there's synergies, where you become a stronger company together than you are alone. So there's too many gold companies right now in the industry. And we did see a fair bit of M&A last year, and I was a big fan of a lot of those deals, the Agnico and Kirkland deal, Pretium and Newcrest. We need to see more of that. And from an Oceana perspective, there's a few things we need to do internally. We need to continue to ramp up the DPO, get that back to steady state, which again, we announced it's tracking ahead of schedule. We expect it in the second quarter of this year. So we need to continue to be focused on delivering that. We've published the Haile technical report. So the numbers are out. It's time for us to execute. The one thing with the technical report is that it didn't cover some of the opportunities that we're currently looking at for further improvements to production, but also reducing our cost base and our capital needs. So we need to keep our head down and deliver on those initiatives, get the SEIS, start building the underground at Haile. And again, we've said that the future of Haile is underground. So we'd like to get underground, start doing some more extensive drilling down there to prove up to the market what we believe is down there at depth. And then obviously Waihi, we continue to ramp up Martha Underground. We expect to be at full production rate next year. It'll basically double production this year from last year, but we'll get to full production rate for Martha Underground next year. Macraes is steady, but again, the big prize for us, the future crown jewel of this portfolio is WKP. And we're investing $10 million this year on exploration, which is significantly more than what we've previously spent because of what we see as the opportunity at WKP. So there's a lot that we're focused on internally to ensure that our shareholders are seeing the value on these initiatives that we're investing in and we're trying to execute on. Obviously, we'll continue to seek out opportunities from an external perspective, but I can tell you our primary focus is internal. If there is an opportunity to do a consolidation of some sort, we'll certainly entertain that. But again, the focus is internal.
Okay, super. Last but not least, you got a new CEO also. Can you comment on that, please?
Yeah, no, absolutely. So the board had launched a CEO search last year and hired a recruitment firm to basically scour the earth, looking for top talent that can take this company into the next level. So it was done properly. It was an extensive search. There was a number of high quality candidates that the board had considered. Special committee of the board reviewing the different candidates and going through the interview process. And so we announced last week a finality to that process with the appointment of Jared Bond, who used to be the Newcrest CFO. So Jared joins us after spending 10 years at Newcrest, where he was a chief financial officer, also a member of the board at Newcrest. And that was during a time where Newcrest went through a considerable transformation through a number of different acquisitions that they completed, but also a financial transformation in terms of their capital structure, etc. So he brings with him some very strong sort of financial background, M&A background. And then also before Newcrest, Jared was at BHP, I believe, for 15 to 16 years. And so having worked at BHP and having worked at Newcrest, he's going to bring a lot of that big mining discipline into Oceana that's fit for purpose. I mean, we don't want to be a small company operating like a larger company, but a lot of the discipline around capital allocation and financial discipline, processes in the areas that we need processes, Jared becomes equipped with that knowledge and that background, and again, would be fit for purpose for OceanaGold.
Fantastic. Sounds like a great game plan. Sam, thank you very much for the update. And I would say you guys are back on track.
Yeah, no, thanks for the opportunity to speak to you again. And I'm feeling pretty good about the future of this company.
Super, me too. I'm a happy shareholder. Let's make some money. Super. Sam, thank you very much. All the best. Have a great day.
Yeah, you too. Take care.
Thank you. Yeah, ladies and gentlemen, that was Sam Pazuki from OceanaGold. Yeah, you heard it. Things are really back on track. Things are really going the smooth way. The company wants to grow significantly this year and the next 2 years. And yeah, I think they do it right because they enlarge the production and they bring down the costs. So that means making more money, paying back debt, and hopefully then maybe in 2 years a dividend. We will see. I'm a shareholder of the company. You should maybe consider to have a very close look on OceanaGold. Thanks for watching us, and bye-bye from Switzerland.